Hi, I'm Josh Brown, coming to you live from the depths of a bear market, or what we think might be the depths, but we'll find out. A lot of people are looking at some of the big rallies that we saw last week and saying this is not how markets bottom. This is not, quote, a textbook bottom. Michael Batnick, my colleague, took a look at the data. We took a look at some charts. I'm going to talk a little bit about how bear market bottoms actually form, and I think this will be really interesting, so stick around. All right, so Mike, a lot of people were saying this is not how markets bottom, but you looked at every major bear market bottom, and I think what you found was that there are a few variations, but there is no textbook bottom. It's different. I don't want to say every time, but almost every time.
Well, I don't like the line. People who are saying this also said that, but I'm gonna do it.
Okay.
The people who said that this is not how markets bottom are the same people who say tops are a process, bottoms are an event.
I say that, but it's stupid, right? It's not real.
But how could you say tops are a process, bottoms are an event, and then say this is not how markets bottom? If bottoms are an event, and this is exactly how they bottom.
So the last week of the year, there was like 1,000-point day in the Dow, and we've since been all over the place. But people saying 1,000-point rallies are not the bottom of a market, but why wouldn't they be? They can be. So
I looked at market bottoms, and markets bottomed that way in 2009. Like, it was not the actual bottom, but I think there was the day at the bottom, March 6th, and then the next day, stocks were up 5%.
So you had a monster day, and I bet people probably on that day were saying another bear market rally. Right. And that would have been a reasonable statement to make, because you do have a lot of those types of days the whole way down.
So in 2000 to 2002, for instance, there was like 7 little bear markets within the big bear market. Right. So there was a ton of bear market rallies.
Yeah, 2002 was brutal because of those bear market rallies, which were like every month almost.
Yeah, other times markets just like ended investor apathy.
Right. So you showed these examples that I thought were really, really good. Some of them are V-shaped bottoms. Some of them are bottoms that are a whimper.
Look at 1978, for example. Like, there's nothing there.
Yeah, there's like nothing. There's nothing on the chart, even with 40 some odd years worth of hindsight, that tells you that should have been the bottom, right? But then there are bottoms where it's like 3 times. Like, you looked at August 1984, which is like a mini cyclical bear market, let's say.
Yep.
It's like a triple bottom.
Yeah, I mean, what's that?
Nothing. It means nothing at all.
So what people are looking for, I believe, and I totally get. Listen, if I was like trading, would I be all in after that 1,000-point day? No. Like, people are probably that's like the sheep buying or whatever.
Because why would you go all in? Because even if it is the bottom, that means there's a lot of money to be made later.
Yeah, right. So I think it does make sense to not panic buy on that day and just to wait and see. Maybe we do retest. Maybe there is a double bottom that everybody always looks for. It's just, of course, it's not that easy. Like, it never is.
Yeah, the 82 bottom, August 1982, which is not just the bottom of a cyclical bear, but actually the end of a secular bear market. That reversal was incredibly powerful.
Yep.
And that's at a time when people are saying the death of equities, and I think the multiple on the S&P was under 10, which earnings multiple, which we've not seen since.
Really. I think it was as low as it was since the 30s.
Yeah, so like that's really at a moment when there's just nobody left to be bearish. But like, we're not even close to a moment like that. We're down 19% from the September high. Like, why would people be looking for an event like that after what we've been through, which frankly is not much yet?
So I'm just like eyeballing these charts, and I don't even see a double bottom. I guess March 2001 was close. But
1990, no. Yeah, and then the October 1998 bottom, which actually is my first experience with a market.
Oh, so that was a 5%.
So yeah, so I was like 21 years old, and I was like cold calling in a brokerage firm as that was happening. I think that was happening like in my first couple of months in the business, and you had a double bottom there.
In October 98?
Yeah, September and October. It hit the same level twice and then bounced.
Yeah. I mean, it hit the same level like 1, 2, 3, 4, 5 times almost.
Right. But But look, I think the moral of the story is if you're listening to people that are like chartists and they're like pattern recognition guys, it's always guys, and they're like, this is not what it looks like when we're at max pessimism or when there's capitulation. How do you know? You don't know what it looks like. You'll know in 3 months when you look back at it, and you'll say, "Oh, that was it," or "That was not it." But there's so much variation
within all of the bottoms in 2000 to 2002, and of course there was only one real bottom, but there was a million bear market rallies. There was a lot of V-shaped recoveries, but I would say more times than not, it is not a V-shape. There could be like a giant bounce, which signals capitulation or everybody back in the pool. And then there are some chops and backing and filling. I think that's like a normal-ish bottom, but there are no rules here.
Well, I was reading somebody that was saying like there are 3 things to look for that, in addition to price, to be able to say this is a bear market rally or it's a true bottom.
Like internals?
Yeah,
I mean, that makes sense. Yeah.
Like looking at RSI, is it diverging? Meaning like is momentum not making a new low with price? Or looking at advanced decline or high-low.
But I'm sure that you could, if you look at that, you would come to a similar conclusion that...
Well, no, I think you should actually rerun these charts and do it with each of those internals.
I'm not going to do that.
And then say, hey, there's nothing there either. Maybe you'll have time for that this spring. All right, that's it from us. How do we wrap this up?
Shalom.
If you have any comments on bear market bottoms, leave us a comment below. We love your feedback. We love our subscribers too. If you're not getting our updates on a regular basis, make sure to subscribe, and we will see you soon.